what Warren Buffett said. Warren Buffett said nothing. Okay, Warren Buffett avoided that question like the plague in terms of, has the Fed done too much? Should they keep raising? Anything like that. Okay, so he refused, and Warren Buffett said Jerome Powell's been doing, in his opinion, a great job, and so I thought that was interesting as well, right? Now, Warren Buffett tends to be more of a positive person, so, maybe there's that, but he didn't say anything bad about Jerome Powell. He didn't say anything bad about the Fed in terms of Warren Buffett. And in a time period, it's interesting to hear that, because I can tell you everybody's been criticizing the Fed. I mean, watch CNBC, and everybody's either has an opinion that they should have been raising faster, or they should be at a higher rate than they're at now, or they should be at a lower rate, or everybody's got an opinion. And it just seemed like Warren Buffett was just like one to just be like, no, I think Jerome Powell's doing a great job, and he should do whatever's in the best interest of America. I just thought that was interesting that everybody thinks they could run the Fed and make these decisions better than Jerome Powell, except Warren Buffett. Maybe everybody else is delusional in the world. I don't know, okay? It's interesting, but I think that's Monday morning quarterback, right? Everybody thinks they can do better than the next guys. Problem with Berkshire and a lot of companies Warren Buffett owns, he owns a lot of companies that are very sensitive to the economy, okay? You want to know what companies I'm talking about? He owns a brick business. He owns a carpet business, okay? He owns, different businesses in relation to construction. Several furniture companies they own. And so when you own those sorts of companies, right, like if the economy really gets hit in a significant way, I can tell you, it's going to damage Berkshire's numbers. And so last year, I think a lot of those companies had a lot of orders still coming in. A lot of homes are still being built, construction. And obviously that's starting to dry up in 2023. And I think that's the lag effect that a lot of his businesses are facing. Now, meanwhile, right, a lot of those businesses did just fine in 2022, but you had a lot of tech companies get hit heavily. And now you've seen a lot of tech companies reposition, cut a lot of employees, cut a lot of expenses over the last quarter or two, right? And then I think a lot of these tech companies are going to report insane profit growth in the back half of this year, regardless of what happens out there. I'm talking Amazon, I'm talking Meta. There's a lot of them that you're going to see their EPS really take off like a rocket ship in the back half of this year, 3Q, 4Q. It's going to be, in my opinion, rather shocking to a lot of folks when they see those sorts of numbers coming in 3Q, 4Q, the net income growth year over year, the earnings per share growth. But for a lot of companies Berkshire owns, there's been a lag effect. And unfortunately, I do think that's going to hit Berkshire over this next bit of time here. And it's just, like I said, it's a lag effect here with Berkshire. And so, in terms of Berkshire stock, I mean, if I had to guess, I wouldn't be surprised if Berkshire underperforms a little bit over this next 12 months, especially if there's any more weakness in the overall macroeconomic landscape here. And so if we look at what companies Berkshire owns, there's three that could be a potential in terms of that 22% number down, right? One could be See's Candies. Probably not. I don't think small transactions like that have really been hurt. I think it's one of these two businesses that's likely the 22% down year over year. I think it's likely either Nebraska Furniture Mart or RC Willey. Both those are furniture companies, and put the pieces together, right? Think about it. Home sales, bad right now. Not a lot of people moving, and not a lot of people doing bigger ticket purchase items like furniture and going out and spending, potentially thousands of dollars on new furniture. So if I had to guess, I would bet you that it's one of those two players that likely is having their numbers down 22% year over year. And if I had to guess, I think it's Nebraska Furniture Mart. Because think about it for a moment, right? Who's Warren Buffett more going to pay attention to? RC Willey? Not really, but he cares about Nebraska Furniture Mart in a huge way. From my understanding, Nebraska Furniture Mart, number one volume seller out there, right? So who knows? Just my opinion on that. You could say maybe it's a diamond company like Ben Bridge, Hellsberg Diamonds. I don't know about that. People are still getting married. A lot of those events that had been postponed are still going on. So if I had to guess, furniture, okay? That's what I'm thinking in regards to that, right? Third thing that was scary is this man mentioned this several times. He said that Berkshire is built to be the last man standing, right? I think I spelled Berkshire wrong there. He said it several times. And he kept alluding, and I never really heard him describe Berkshire as last man standing, right? But it just kind of goes to show you that maybe he's thinking things could deteriorate in the economy, right? And he's built a company here that regardless can, get through any sort of situation. But also, I do think Warren Buffett's very aware that likely any Berkshire Hathaway shareholders are likely watching this interview, right? So I feel like he kind of talks in code a little bit to his shareholder base when he's describing things like we're built to be the last man standing, to give the shareholder base confidence, right? But also it is kind of a scary commentary when you hear somebody like Warren Buffett continue to mention this over and over again. We're built to be the last man standing. Oh gosh, okay, are you going to be the last man standing? Like, what are we talking about here, okay? Let me tell you about my conspiracy theory, okay? My conspiracy theory has always been Wall Street, big money, is going to put big pressure on the Federal Reserve to start lowering rates this summer. How do they do that? Tank stocks, report bad numbers, and the Fed will lower rates, and especially if CPI continues to come down, which is a realistic expectation, especially if you're expecting the economy to get worse. And so I've always had this like little conspiracy theory of mine that Wall Street's going to force the Fed's hand to lowering rates at some point this summer. Okay. And like I said, they do that by tanking the S&P 500 10 to 20%. And so if that's a scenario that plays out, right, and it might not play out, but let's say it's a scenario that plays out, then that's a double whammy hit for a company like RH. Because if that happens, this baby's going under $200 for sure if that's a scenario that plays out, if we're going to have a 10 to 20% pullback in the S&P 500. It may be even under $150 in that scenario, but also their business would get hit. Because remember who the clientele is of a company like RH, a lot of high net worth individuals. If the stock market gets hit heavily, I can tell you, there's a big pullback in furniture spending, new luxury home sales, luxury home sales have already fallen off a cliff over this past year. I wouldn't be surprised if it got worse if we saw a major pullback in the S&P 500. Then we'd likely see a bottoming of the business in likely early 2024, and then it's kind of up and away from there. So my hope is actually that scenario plays out there, because that would be a very attractive kind of buying opportunity for RH there, okay? It was actually the RH CEO on the latest conference call RH had, okay? And he said in this conference call, he's like, people, don't fear a recession. Like, recessions come and they go. Like, we're going to have recessions. Don't fear that. Fear what we had in the 1970s, when you had inflation go crazy, then come down a little bit, go crazy again, come down a little bit, go crazy again. And they kept having to raise rates again and again and again until, what was the Fed funds rate at the peak? 20% or something like that? And so there was just a great perspective I heard from the RH CEO that I was just like, I think more people should probably be in that thought process, because I can tell you, if you had to say, would you rather go through, a recession, that usually lasts, I mean, it depends on recessions. It could last, 9 months, 18 months, something like that. Or would you rather go through an entire decade of like this, right? And a lot more of this than that. Okay. So I think that's a fair point. Don't fear a recession. Do fear something like that happened in the 1970s. And obviously that's what the Fed's trying to avoid here. They do not want one of those situations, because I can tell you, that makes things very bad for a lot of people for a long time. And recessions, you can get over that. I mean, even in the Great Financial Crisis, like we it was really bad, and that was an extreme recession, right? That was the worst recession we pretty much had in an insanely long time. Some say since the Great Depression, right? And so that was dramatic, but at the end of the day, we made it out. Yeah, it was a slow recovery over the next few years, but we made it out, and then we had a prosperous next decade. And so, I think I like that perspective from the RH CEO.